Good day. As we begin our biannual conference today, we look ahead to an array of global economic challenges and look back on a year and a half of events unprecedented in recent times. The tragedy of so many lives lost has left us humbled and aware of how much further down the road to recovery we still need to go. We are entering an era of renewed focus on public health needs and new awareness of the underlying fragility of our ecosystems. At the same time, the economic responses to support our societies through the crisis expose the reality of economic scarcity and the deep economic challenges that we need to address. To that end, let me thank the Bank for International Settlements for partnering with us on the celebration of the centenary of the South African Reserve Bank. Besides celebrating this important milestone, it was also a year of other anniversaries for the bank. Our national currency, the rand, turned 60, and we are commemorating 25 years of central bank independence, as well as 21 years of inflation targeting in South Africa. It is therefore an enormous privilege to have the BIS join us this week in celebrating a very special year for the bank. Let me also say that the BIS has been a source of great intellectual support to the South African Reserve Bank over many years, particularly under the leadership of Augustine Carstens, a close friend of mine to South Africa and to the developing world more broadly. Our conference this week is focused on three major policy concerns: monetary policy, fiscal policy, and financial stability. These three topics will be addressed by accomplished economists in their fields. We welcome Raghuram Rajan, Kamen Reinhardt, and Yu Xing as our lead speakers. We are also immensely fortunate to have a fantastic group of discussants: Lucretia Rachid, Ricardo Reis, Stan Duplessis, Ugo Panisa, Lema Stenberg, and Laura Alfaro. We will conclude the conference on Friday, where I will be joined by Augustine and US Federal Reserve Chair Jerome Powell for a panel discussion to be hosted by Francina Lacroix of Bloomberg Television. Let me take this opportunity to welcome and thank you all for your participation in this conference. In particular, I would like to thank my colleagues, the governors from various jurisdictions who have taken the time to become part of this conference. My only regret is that we could not yet have you all and our other guests here in person. I am sure we will get there soon. Today, we will begin with our monetary policy session to be chaired by Claudio Borio of the BIS. But before that, let me hand over to my partner and friend, Augustine, for his opening remarks. Augustine, over to you.
Thank you very much, Lesetia, for your very, very kind words, and I extend my greetings to all the participants. Let me say that I have known Lesetia for many years, going back to the times we both were in our respective countries' ministries of finance. I have very fond memories of embracing together the flag of emerging markets and developing countries in G20 and IMF meetings. But what I admire the most about Lesetia is his extraordinary ability to translate extremely difficult concepts into layman language. My favorite example was here at the BIS meeting when he said that implementing massive monetary expansion in emerging markets in pandemic times was akin to going to swim with the crocodiles. So, going back to the South African Reserve Bank, let me congratulate the bank on its centenary by video, and something that I already did last summer in a special event that was organized. let me certainly reiterate my congratulations. You can be very proud of your institution and its long history of many accomplishments through many economic and social upheavals. An important achievement has been making price stability a reality in South Africa thanks to 20 years of inflation targeting. The Reserve Bank, being in charge of financial stability and banking regulation, has also contributed much to South Africa's vibrant and robust financial sector. And the Reserve Bank is continuously looking ahead, assessing future challenges such as digital currencies. In all of these endeavors, the Reserve Bank has been closely engaged with the international community and cooperated closely with the BIS during its 50 years as a member. In those ways, the Reserve Bank carries a large weight in the international central bank community, with key staff chairing international groups, including at the BIS. More generally, you set an example for many key values of good central banking, such as diversity. It is a pleasure for the BIS to co-organize this conference with the Reserve Bank. I only regret that this rendezvous is yet again only by video. This is not what we had originally planned. When the Reserve Bank and the BIS teamed up to commemorate this anniversary, we expected to meet in person in South Africa. We also imagined a very different world economy. The pandemic was on no one's radar screen at the time. 1.5 years after the crisis struck with full force, we have made good progress with the recovery well underway. But we are by no means out of the woods yet. The central banking community and policymakers more generally are facing new challenges. Let me mention those we will be exploring together over the next 2 days. First, higher and more sustained inflation. I recall that 1 year ago, the central scenario saw persistent demand weakness. Instead, we are now facing considerable inflationary pressures. A confluence of factors has been at work, including a surprisingly strong recovery in demand, a very expansionary fiscal policy in key jurisdictions, supply bottlenecks, and the demand-supply mismatches. As these forces set in, we expect the increase in inflation to be temporary. This may still be so, but it has proven more persistent than anticipated. We have not faced such a situation for decades. Second, risks to financial stability. Overall indebtedness, not just public but also private, has reached new heights. Risk-taking in financial markets has been quite strong and valuations stretched. As experience indicates, these conditions provide fertile ground for the build-up of vulnerabilities. These economic challenges raise broader questions about policy. The interaction between fiscal and monetary policy. Working in concert, the two policies were instrumental in containing the damage caused by the crisis and in nursing the recovery. But there is no free lunch, and the price has been a further narrowing in the room for policy maneuver. Emerging markets have been especially affected. Over the medium to long term, the two policies will need to find a path toward normalization. Despite public debt at historical peaks, interest rates at historical troughs have meant that the debt burden has never felt so light. But it will not continue to be the case along the long normalization path. That path will be hazardous and call for stronger growth, easier said than done. Finally, analytical paradigms more generally. The GFC and the pandemic crisis have both reflected and catalyzed structural changes in the global economy. Are the analytical paradigms on which central banks rely to inform policy still fully fit for purpose? Against this backdrop, it is essential that policymakers and academic experts join forces to analyze in depth the challenges ahead. Precisely this conference provides an excellent opportunity to do so. I am looking forward to the lessons from the excellent lineup of presenters and discussants we have. I hope you enjoy the conference, and as Lesecha said, I will join Lesecha and Jay Powell for a final panel. Thank you very much.